It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, right here. This is the Tiger Technicians Hour, and although it's Thursday, October the 18th, because I won't be here, I'll be doing my opening call for my subscribers tomorrow, but I will not be here for the day. I'm going to be doing my show right now as if it was a Thursday and Friday show. I'm going to give parameters. I'm going to show you what to look for. And whatever happens today at the close, especially since tomorrow is options expiration Friday, I will give you parameters that I think are very important. Why? Because when I've spoken about this bifurcated market, a market that says, do not be afraid to go long if the technicals that you are looking at in any particular stock, indexes, personally, I'm avoiding the indexes right now. This whippiness is just for short-term trades, absolutely. I'm talking about near-term trades, intraday, maybe two-day trades. I just don't see the benefit of being in a position just yet. Maybe next week that's different. It is stock picking. And believe me, when you're looking at stocks that are moving higher, and I even have to tell you that I'm looking at Dow and Dow-type stocks that are really integral to this economy, to this particular phase, that are actually acting pretty well right now. Not great, but pretty well. And I see other stocks that are just acting very poorly. In fact, I'm going to go through some in a few minutes. I'll go through, just for fun, we'll go through, let me write it down. I like to do this. I'll go through IBD. I'll go through a number of them right at the top of the list. And then I'm going to do, and I'm going to put alphabet. Why? Because the ChapmanWave, in essence, is all about the alphabet. A, peak A. Remember, I don't do A to B equals C to D. I do it in a different way. That's not the point. The point is, I use A, B, C, D, E, F, and even G. Just as if you're playing the piano. You got an A, B, C, D, E, F, G. There is no H. Well, in German there's a Habermal, but you won't use that. We're doing English right now. So there's never an H. So it means when you look back and you're at a peak G, you better pick, and I'll show you some Gs when we go through the charts today. It's really important. I have a review webinar coming up today a week, live at Babson Conference Center, Executive Conference Center here in the Wellesley area, Massachusetts. About, about 10 miles, 11 miles out of Boston from the airport. Fabulous. If you want to sleep over, you can sleep over. There's just a very inexpensive accommodation, relatively inexpensive, and fabulous food. I always talk about the food. And then that's level 2. So you really have to have done my level 1 beforehand. I know there are many, many people who have done that over the years. So it's not just a review. It is looking at all the new techniques, the sophistication of ideas. You know, when let's just say you do woodworking or you do gardening or whatever it is, what you're doing this year is not exactly what you're doing done last year, the year before. There's a little bit of refinement. The weather's changed. Your experience tells you that 2 parts this is better than 3 parts that. You know, whatever it is. You're using this chisel and say, it's very important. And not only that, I have people who come every year for years and years because they want the review. They want to refresh. They know that they've forgotten things. So that's for level 2. Even more important than level 2, because those people have done level 1, they know, or they use the ChapmanWave all the time. I have people who say, I only use the ChapmanWave. I have to tell you, I don't think you need to only use the ChapmanWave. You can use the techniques that mine is incorporating all your other skills. If you use volume, if you use Fibonacci, if you use candlesticks, Steve's got a terrific, I know it's a terrific workshop coming up tomorrow on candlesticks. I also use candlesticks. I have a whole series of candles that are specific to the ChapmanWave methodology. How you use them, what you do. I have round numbers that I look at. I'm going to show some today. I have chart patterns repeat over and over and over. I use volume in a different way. I'm going to show you 2 ways to use volume in my level 1 course that's coming up December the 6th and 7th. Go to the front page of TFNN, check it out. There are just bonuses that I'm throwing in. I love teaching this. I am, of course, an advocate for the ChapmanWave methodology. And in that, I'm going to show you charts today. So level 1, the basic one, where you'll get the CD introducing the ChapmanWave methodology, in fact, I'm even thinking now that I'm going to give a little bit, for those people who sign up in time, I'll be giving a lead up going into it. I'm going to send out a couple of charts beforehand. So we've actually started this is a live webinar wherever you are in the world. Having people from Australia, from Europe, from parts of Canada, from Hawaii, just everywhere that have done this. So it's live webinar, 2 days, Thursday, Friday, December the 6th and 7th. Please consider it and give it to yourself as a holiday gift, because I believe this is the one gift that is the gift that keeps on giving. Ha! So let's go to what we're looking at now. The Dow's 13,560 up 3. S&P. So today being Thursday, if it's repeated on Friday, it could be a different price. The S&P's at 14.59, down $1.50. Comp index is minus 12 at 30.91. Now, gold is down 8. I still believe that gold is more downside than upside. I believe we're looking at lower highs and lower lows in a sideways consolidation between quite big parameters, actually. I'm totally wrong if gold just suddenly spikes up and goes to above 1,800, 1790s, somewhere around there. And then I'm just totally wrong. But this is what I'm thinking. Silver also is consolidating, down 24 cents at 32.94. Platinum's down 15. Now, copper's holding well at 3.74, down 35 cents. Now, what's really important to, excuse me, about this is that if copper manages to hold here, rather than to really spike down below, let's say, 370, let's call it 370, that would be saying, let's call it 369. That would be saying that copper, at least in this particular phase, is not going down. It's holding steady. Steady is good. And crude oil is down 97 cents at 91.50, and bonds are unch. I'm going to talk about that as we go through these charts. Right now, I'm showing you, if you're looking at Tiger TV, because I always say, looking at Tiger TV, and I say, oh my goodness, I forgot. I forgot to set up because I want to see. I'm changing colors. I'm doing everything I can. I want you to be able to visualize this. I want you to be able to see my charts as I see them. And I'm seeing them right now. Certainly, I'm seeing on my 1, 2, 3, 5, 6, 7 screens, different screens doing different things. But I'm seeing the charts, and as a result, I want to look at it not on the big screen. I want to look at it on the small screen. So here I am. I've just about got it. It's coming up. There it is. It's about to come up. Hope it isn't the volumes. Hope the volume's good. There it goes. So what I'm looking at here is I'm looking at a situation where just cancel that, where the E-minis have just created a peak F. What I showed, and I show my subscribers to my opening call every single day, I show the 120-minute, sometimes it's the 10-minute with the 120-minute E-mini futures. I don't tell them whether to buy or sell. I just do so much work. I couldn't add this as well. This would almost have to be another service. But what I do show is the ChapmanWave methodology and the waveform and the inverted V or V-shaped pattern, or the inverted R, the cup or arch pattern, how they repeat over and over, how you get a left side, right side prime time sequence, how you can break above in a ChapmanWave cup and ladle formation, which it did. The last time it went to peak F, the 6th highest peak, from the low bar back at 1427, somewhere around there, back in the beginning of October, it went to 1466 peak F, the 6th highest peak in the 120-minute chart at 12:30 on the 5th of October. Then it plunged down to 1416, the low of, what date was that? That was the 14th of October. Now it's run up, and yesterday evening, last evening, it went to 1458.25, where another peak F, and it went right to the pink zone. Yours is not quite pink, but that upper rectangle resistance area. So it's below right now it is at 1455. Now the 1468 is above the 1466 high. It is a peak F, but what I had said is that the technicals are not nearly as bad as it was then, and this should just be a sideways consolidation. I give the parameters, I discuss it, I discuss the techniques involved, etc. Now, what's really important is that when we're looking at the Dow has actually held the up channel support level in the chart that I'm showing you right now with the black background. And what's very important about that is that it makes the 13,296 low of the 12th of October absolutely important. Why? Because if it smashes through that, I don't mean if it just gets under it, if it closes in the 30,250 area, 300 points below this, that would say, be really careful. We're going to have, if not price, we're going to have time on our hands in a consolidation. But most importantly, I'm looking at Dow and Dow type stocks that have been completely out of favor, doing really well right now. I have to consider that is more important to me than the Investors Business Daily stocks that are showing a tremendous toppiness right now. So let me put that aside and we just quickly talk about the TLT, and then we'll take our first caller. And the TLT trading at 120.67, down 18 cents, is right. It's hugging the 200-period exponential moving average at 121.04. This is the Lehman 20-year iShares 20-year Treasury bond fund. But more importantly, and we're going to follow this all the way through October, the candle of last month called the ChapmanWave Roman candle, we are now into the wick. If it closes inside the middle part of this wick, in other words, if it closes below 120.78, right now it's 120.65, there is a 70 to 80% chance that the bottom of the wick at 118.05 will be tested in November. If it manages to close somewhere in the 122.15 area, that's the 9-period exponential moving average, monthly chart, remember, that'll be very important to say, okay, Fed is still in there doing its stuff and propping up the TLT, which by any other means, or any other account, any other analysis, should be dropping. So let's take our first call, and we've got online John from Nashville, Tennessee. Hi, John. How are you?
Very well, Basil. Yourself?
I'm very well, thank you.
Oh, thank you. I'm doing a follow-up call on DNKN. They had called you on Monday. And,
correct. And what I said was that it was acting very well, that it was in leg D. Folks, now, this is the ChapmanWave methodology. This is just a perfect example. In the ChapmanWave methodology, what we look for is a buy signal that can go to a buy mode, and the implication is that from a most obvious low bar, not only are you going to get one peak A, but you're only going to get peak B with a confirmation with the MACD and stochastic saying it's in a buy mode that should take you to at least a D. At D, you've got to be careful, and you can even start a brand new buy mode. We're going to discuss this beautiful chart of Dunkin' Donuts. It's called Dunkin' Brands Group, Inc., trading at 32.39, down 27 cents. Right after this, very important.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everybody. We're back, and let's see. Let's go straight. We're going to go straight to our caller. We've got John in Nashville looking at Dunkin'. I keep saying when it said Dunkin' Donuts, that's what they have. It's called Dunkin' Brands Group, Inc. Started off right here in Quincy, Massachusetts, just outside Boston, a suburb, a city that's, I think it's no more than about 6 miles, maybe, from Boston, and right on the coast, and was started there, and in fact, one of the great brands of America, and a coffee that my wife loves, even though she's tried others, and she does like others, but her favorite is Dunkin'. And we're going to go right to John in Nashville, and we're going to look at the chart. Now, so I can't remember, did you have it or you didn't have it?
Yes, I've had it for quite a while.
Yeah, I remember exactly. And what I'd say to you is it had gotten back. Oh, now it's coming back. What I'd say is if it gets back to your price level, that's where you've got to be a little bit careful. You've got to do a little analysis sometimes. And I actually recommend this I recommend it for myself, because what I do with the futures, if I get into a position and it goes against me, and for some reason I try not to do this, but if I'm just stubborn because I absolutely believe it's going to go higher and then goes lower than I expect, I don't double down or anything like that unless I've got a brand new signal. But the most important thing is if and when it gets back close. It doesn't even have to get back to the price I got it at. If it gets back or close, I am out of that position. And even if 5 seconds later I buy it back, I'm buying it back because I've got a new mindset. The mindset says, I've got all my signals, now it's ready to go. thank you for giving me an opportunity to get out a break even or a little bit of a profit or a little bit of a loss. I can make it up in a second. That's not the issue. Now, what I say to you is some part of your position should have, at least you should be thinking about a stop on a part of your position. Why? Because it went deeper than you expected to the downside. Now you're back to even or close to even, and it gives you time to think. So you've had time to think. Now let's do the analysis. My analysis says that Dunkin' brands, now I especially did this because I wanted to try different colors. I've got the red is down and green is up. It makes it a little difficult for me to see the candles the way I like to see candles, but I want to make sure that everything we're looking at here is what you can see as well, right there, either on tiger.mobi on your mobile device, or if you're looking in the den, or if you're looking at TFNN on Channel 1 Tiger TV. And my shows are replayed at 11 o'clock, not 11 o'clock, on Channel 11, because it's 11 o'clock time frame, but on Channel 11, and you can just check them out. Now, what I'm going to recommend, because I believe that you have correctly identified a stock, and I have to say with the potential, because we don't really know for sure, but it has the potential for more of an intermediate term play. And what I mean by that, I'm showing in the weekly chart. Let me just do the weekly, because I believe that you were looking at this as an intermediate term position play, correct?
Yes, sir.
So I've got something that I call the falling axe. It looks like, an axe has an expanding blade, and all it looks is like you've got a long handle. That long handle goes up, and then it stops. I'm just going to make it blue because that seems to be the color that is most appropriate right now. And then you see a series. It goes to a peak D, E, or F. Then it comes down sharply. And what you see is lower highs and much lower lows. Now, what I love to do in the ChapmanWave is try to make things as simple as I can. I know it sounds complex, and if one is listening, I don't know how you can actually listen without seeing the charts. I know I couldn't do it. I'm visual. I have to see the charts. And what you can see is that the high of 37.02 on the week of the 22nd of June, and the high of 36.11, the high of the week of the 20th of July, and this week's high and the candle where it is right now, the high was 33.09. The candle right now is at 32.51. There's a declining line. There's a much sharper declining line from the lows of the week of the 29th of June down to the week of the 27th of July and the 3rd of August. And what happens is it held way above the 200 period moving average. That's this brownish moving average right here. The MACD's turned around, and it looks like for the first time in ages, the MACD's fast-moving average, the green line, the green moving average, is about to cross the fast-moving average. But it's a weekly chart. I have to wait for Friday at 4 o'clock. The on-balance volume is very strong, and the stochastic's moving up nicely. It's only at 34%, but it is moving up nicely. Now what happens in this particular chart, and the reason why I'm liking it in terms of your position, is that if it closes this Friday or by next Friday, anywhere in the 33.49, maybe the 33.75 or higher area, it has broken that downtrend line. And that is really important. We'll continue with this because it's like a little bit of a lesson I'm giving right here. TFNN. I'll be right back with John. We're looking at DNKN Dunkin'.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and we are back, and we've got John online. Now, we're looking at Duncan. I'm going to go back to the daily for a moment. It's trading at 32.50. The ChapmanWave is a methodology that tries to identify the most obvious lowest low bar, and from that bar, you can go to each successively higher peak. Remember, I got nothing to do with, this has nothing to do with AB equals CD. This has to do with peak A, peak B, peak C, peak D, trough A, trough B on the way down. So, and the higher peaks and lower troughs. So the ChapmanWave is the waveform that never sleeps. Every single movement is identified and the structure is analyzed. It's just the process is ongoing. So from the low bar of 27.93 on the 23rd of August, you've got a peak A at 29.58, a peak B at 29.72 on the 6th of September, a peak D on the 12th of September at 30.80, and you get your peak D at 31.24 on the 14th. And what does it do? It goes down, and that actually looks like an A to B equals C to D with an extension. So it goes trough. Only one trough. That's a trough A, and a trough A is at 28.50. You move to the right, you see the next trough A is at 28.62. So what? That starts a brand new buy signal that goes to 29.88 on the 27th of September. A. B is at 30.25, high of the 3rd of October. C is 31.22, the high of the 5th. And where does it go to? A peak D on the 15th of October at 33.09. And what I'd said is the technicals, the stochastic and MACD are still very strong. I like it, but just for safety's sake, because it's got back to where you were, I would put a stop on some part of my position a little lower down. The moving average support is at 31.79. I'd probably give it a little bit more on some half of the position at least. I'd give it something like it's a little wide, but that's just the way it'll have to be. Underneath 30.80, that's really quite far. It's $1.25 lower. I'd say take something off, but still keep the core position. Now, we've had 2 peak Ds, but there's a cup formation. And what I've done is, let me see, oh, it's not coming up here. What I've done is I've drawn green and a kind of a gray area. And what that says is that the green area should become a support level. And that support level will take it to the next resistance zone, which takes it to the 34.22 high of the 20th of July. There's a left side, right side price match. There's an ascending inside wedge, a ChapmanWave technique that I teach, and that says somewhere around the somewhere around the 31st of October. It's what, about 10 days time or so, a little more. There should be a test. As long as we can break above 33.09 and hold, there should be a test of the 34.22 area. So I like it. Now moving on to the weekly chart. Why? Because you've got to break out. The breakout that I discussed with you is very important because it'll be a deep cup formation, but a cup formation nevertheless. So any close above 34 on any day in Duncan would be very important because it would improve the weekly chart, and then I can go to the monthly chart. The monthly chart, since this low of 23.24 back in December of 2011, has made a really strong leg A to 37.02, but that's only 14 points, about 55 or 60% for an IPO of this magnitude with this international brand. I suspect that over a period of time, Duncan will take out the 37.02 high and go to leg B. I like it. It'll just completely fail if it closes under 27.80 in the next 2 to 3 weeks. I don't think that's going to happen. I think you've got a great position, but some part of it, for security, you need to just make some kind of a stop. So congratulations on holding. And I think you've got yourself a nice position. I'm looking at this on the next pullback. I'm going to decide whether I want to put it into my opening call for my subscribers as one of those more intermediate term positions. I do like it. And we did have it at one point, and I'm actually sorry I just didn't keep it. I shouldn't have even worried about pullbacks or anything. I think it's a good brand and a good stock. Thanks so much for calling, John. I hope I helped you.
It did, Basil. You know, Duncan over here in Tennessee and other parts of the country, it's just something new. It's starting to grow now.
That's the other thing. I forgot to even mention that it is new in some. We're used to it. It's been here forever. But it's new in some parts. And I have to tell you, there are people, I don't know how they do it. There are people lined up any time of the day and night right there buying those donuts and things. Anyway, thanks so much for calling.
Okay, thank you very much.
Well, let's go to Dan in Miami. We'll talk about the dollar. Is that correct? Hi, Dan.
Hi, Basil. How you doing?
I'm doing well. You know, I was just thinking, I have not been, the only time I was in Miami was back with the silver crisis. Now, that was back, and I know that because I had a mutual fund client who just kept trading silver. And that was back in, was it in 1992, 93? It was just at that big, that was a real recession. That was a real recession. I remember looking at a building there. I was at a hotel. My wife was at a conference, and I remember on the waterfront, and I remember saying, that pink building, I want to buy it. And I almost made an offer for it. And then I thought, I'm in Boston. How the heck am I going to keep coming down to Florida to check on it? But it was an apartment building, and it was really pretty. I love that Art Deco style. So I didn't do it. Another one of those coulda, shoulda, woulda. So you wanted to look at the dollar, correct?
Dollar daily, weekly.
Okay, great.
Weekly,
so since this is going to be a 2-day show, this is the most appropriate time to be looking at the dollar. And once again, I'm going to be looking at it with a white background chart because I want to show this huge cup. I wonder if it's going to be better to see it. Why is that not coming up? Let me just see if I just want to see which chart is actually better because I've done them both, and I want to see which one shows up better because Yeah. Okay. In the daily, the dollar is making the pattern that I call the dreaded H, and that is a very sharp pullback to the left side. It goes from 84.10 high of 24th of July down to the most recent low of 78.60 on the 14th of September. What does it do? It goes peak A, B, C, D, pulls back. Stochastics very poor. MACD is still showing strength. Folks, if you want to learn these techniques that I'm going to be teaching, I'll teach you how that 9-period differential, that fast-moving average of the MACD, how it is so important and why it is so important. So it deflects low and then finally goes up, and right now it's testing the slow-moving average, goes to a D and then pops up one more time to a peak E. That's 80.21, failing technicals, and it pulls back. Now, what I normally do is I draw in the arch, but I'm only drawing in the arch to say, I don't know, but it's got a pattern that says, I want to come back and test in the area. It doesn't say specifically, but in the area of the low of 78.60. And unless the short term is starting to a really good signal, there's a good chance that it's a buy signal. There's a good chance that it will test that. So that's the daily, and it says this pattern will become very positive if there is no test of the left side low of 78.60, but instead there's a rally that takes the dollar above the previous left side peak of importance, and that's the doji candle of 79.97 on, this is a continuous contract, dollar DXY, US dollar index, and that's 79.97 on the 15th of October. If it does that, then the whole area of that peak E at 80.21 to the 200-period moving average of 80.43 becomes a target. So that says, let's look at the monthly. At the weekly. Now, you don't have a position, right? You're looking at this as potential to give you information about other things?
Yeah, right.
Okay.
Yeah.
Now, if you look
weekly,
at the...
if you let me, looking at the weekly, it looks like it's below the April-May area there.
Yeah, you see, this is very interesting. Why? Because the weekly is in fact giving signals that say, I'm not breaking down yet, but I'm absolutely not showing any sign of strength. But what I've done is I've drawn in two trend lines that are very important. Trend lines, folks, are not channels. They are lines that join certain troughs or certain peaks. And what this one says is, I've got a declining wedge. The declining wedge says that unless I break out, that's me, the dollar, and break out above 80.21, the high of the week of the 12th of October, I'm probably going to be testing the lower side of this trend line. And let me make it a little different color there, that trend line right there. And that trend line says that the upper potential that was the August 2010 high of 88.71 to a price time match just completely failed. Instead, the dollar's gone into the sideways trading range, and that's really what I think it is, a sideways trading range, with a chance that it's going to test 78.72. And if it takes out 78.72, then you've got to anticipate that the trend line I'm looking at will take it to 77.60. Where is 77.60? It's right at the previous lows. Oh, it's even below the 78.10 low of this week of the 2nd of March. So now let's look at it. If you don't mind, I'm going to do it in relation to the EUR-USD, which is the euro-dollar currency pair. Now, when I talk about a bifurcated market, it is fascinating that gold is not zooming to the upside with the dollar weak, and it's not participating as a triumvirate that you used to have when you saw gold, the euro, and the general stock market rising. We've got a bifurcated triumvirate here. Gold is kind of failing in a way. The dollar is pulling back, holding okay, considering that the euro is really close to testing in the weekly chart the high of 1.317, which was the high of the 21st of September. If it takes that out, then the magnet of 1.339, the 200-period exponential moving average, plus the fact that the MACD's rising, the histogram, that's those little bars that you can see, the vertical bars on my chart, those are rising. And even more important in this whole perspective is that in looking at this chart, it's walking the 9-period exponential moving average. That's that white line right there. I can't do it. Why is my arrow flickering like that? I do not like a flickering arrow. That's not a good sign. Okay, so far, and I have to say so far, stochastics at 82%, that's good. MACD is rising, that's good. The histogram is still expanding at 0.0097, that's good. The price is above the 9-period moving average, that's good. There's a confirmed buy signal that is so close to going to a buy mode confirmation if leg C starts above 1.317, now holding at 1.310, that I have to give the benefit of the doubt to the euro dollar as being positive, and that says to me that the dollar is probably going to come down. And if I can just go to my white chart for a moment, the dollar, you can see that the 200-period exponential moving average is strong resistance, just as it's strong support for the euro-dollar currency pair. I suggest to you that there's a really good chance that the dollar is going to take out the 78.60. The reason why in my core Dow quartet, I call it an index, a made-up term, index, the majority of the 4 stocks, 3 out of 4, are acting really well. I suggest to you that the market is holding well and it's going to go higher. And if it does, the dollar is going to be pulling back. And if it breaks the either this Friday or the coming Friday at the close, if it closes under 78.60, then that whole area of 78.10 from the second week of the 2nd of March is going to become a potential. Now there's something else on a short-term basis. It also looks like there's a head and shoulders pattern forming in the dollar weekly. That takes me to the monthly, and the monthly says we've made a peak D. Once again, you've got your D. I don't know how many times it is today alone. And that D was a pathetic rally from 72.80 to 84.10. The worst rally we've had in ages. And that says to me the MACD is still okay, but the stochastic's pulling back. There's really a good chance that we're going to go lower in the dollar. Hope that in a sense gives you the perspective that I'm looking at. But I have to tell you, in looking at my 3 bears, that is VIXI, Dolly, and Bondi, that's the volatility index, which still remains at 14 point, under 15 now. The dollar is acting weak, and bonds are down 41 cents. Again, the TLT is lower. And I think that monthly chart is telling us we could go lower. I think the dollar's going lower.
The bonds look awful weak, too.
And bonds look weak. They haven't broken down, but they just look like they're making lower lows and lower highs, and that just says be careful.
Okay. Great. If you get a minute, take a look at Apple, too, when you get a chance. Thanks.
I will try to do that a little later on. I still got callers online, and there's someone in the den that I promised I would look at. Thanks so much for calling, and I will speak. If you call me again Monday, I won't be here tomorrow. That's Friday, but I'll be back on Monday. Thanks for calling. Let's go to Nick in Oklahoma City. Hi, Nick. How are you?
Good, Basil. Thank you for taking my call.
Oh, it's my pleasure.
I know semiconductors are getting beaten up.
Yes.
And yet I still was wondering, what do you think about CY, Cypress Semiconductor?
Okay, now when I speak to my buddy who owns a semiconductor business, he's telling me for months now that Applied Materials and many others are cutting back. They're not seeing the kind of growth they thought they would in this particular quarter. And yet I always say to him, you know what, I look at the charts because the charts sometimes tell me on a short-term basis something a little different. So you know what I'm going to do? I've got CY up right now. I used to have it notated. It doesn't need to be notated now. We'll look at it. I'll do it during the break. We'll be back with Cypress.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines. Practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at TFNN.com and sign up today, because candlesticks will make you a better trader.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. This is the final segment of this show. It's the Thursday show, but I hope if I'm not here tomorrow, that's Friday. So this could be repeated October the 19th. Some of us remember October the 19th really well, especially 1987. And we survived it. Survived it quite well, actually. So just quickly going through this. There you are. I've just redone it just in... Not even the whole break, half the break I took to do two charts. One was the ACI, which is the coal company, and I did that, and I'll just review it in a moment. But because we've got on the line Nick from Oklahoma City looking at Cypress Semiconductor, I wanted to do this chart. Now, you haven't got any position right now, correct? Nick? Oh, Nick? Oh, I thought Nick was there. Maybe he's not. Maybe he's listening, but he's not on the line. Nick, just yell out, I'm here, even while I'm talking. If you don't have a position, I'm going to say to you, don't start a position yet. Wait for this candle. You see the way it started up yesterday, 3 days? It had a fabulous rally right to the 11.13 high. Right now it's at 10.11, down 86. That give back is really important. Why? Because it's testing out the low from the 1021 low of the 25th of July. What did it do? It made a perfect peak A. I especially made this nice and big, nice and chubby. So the 10, 12, 10, 12, 10. So that you could see the peaks going to peak D. Then what happens is it pull back. Remember I said in my ChapmanWave methodology 2-day seminar in the 6th and 7th, I'm going to teach and show you exactly why the fast moving of the MACD is so important to monitor. Look how it went underneath and it held quite nicely. Even the stochastic went all the way down to 20%. The price held and then it went pop to the upside and then above the 1283 high of the 21st of August to a peak E. I put an F. It should be an E. I'm especially doing this in white, so if you want to print this out to learn something, it'll be my pleasure. Now it's pulled back in a sharper time frame, but then it bounced. So it's turning this whole area of 10 to 10.80 into an attempt to make some kind of a bottom. Now, real quickly, the weekly chart had a beautiful peak E with the cup formation, the one I call the drop bucket double top failure, and then it's plummeted down back to that gray area. I'm going to suggest that you don't do anything. Don't do anything today. Don't do anything Friday. Let's look at it together on Monday. Why? Because this has always been a pretty good... Nick, you're there, right?
I am back, Basil. Yeah,
yes.
We got cut off, but thank you. I was listening.
Okay, so I knew you'd be listening. What I wanted to say is don't do anything yet. The candle pattern that has just formed over the last 5 sessions, is going to be really important my suspicion is you would like this as a shorter term percentage play, correct?
Exactly.
Yeah. I'm looking at it that way as well. Don't do anything. Let's see where this candle rests at the end of the day today and tomorrow. On Monday, it'll be a perfect time to look at it because if it has any chance to rally, the next rally should take it above the high of yesterday, above 11.13. So as a trade, I can see it being a fabulous trade going towards 11.20. Then 1180, and if it holds there, it could touch once again the 13-14 200 period moving average of the weekly. Obviously, if it closes underneath the low of the 12th, the 987 level, I don't want any part of this at all. So don't do anything. Keep it in mind. Let's look at it again Monday together, huh?
We'll get in touch. You are
Thank you so much for calling. I appreciate it. Have a great weekend. So, folks, just as we're going out, because we're looking at this as a 2-day webinar, let me just quickly give you the parameters I'm looking for. So far, I like the action in the market. And what I'm looking at here is that in the Dow, it's really important between today's close and Friday's close, that the Dow does not close underneath 13,468. If it does that, then we've got to anticipate it could retest that major support area of 13,350 again. So far, I like it. I like what's